Hello, everyone. Good morning to you. Good afternoon. Good evening, depending on whichever part of the world you are tuning in from. Very excited to welcome you to yet another promising edition on the Forex Morning Mastery. And my own name here is Sheriff Daramola. And for the next 30 to 40 minutes, I'm going to be your host as we will be delving into the financial landscape, looking at the current market conditions from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action ahead of both the London and the New York session today. Well, today is Wednesday. That's the third day of the week. We are right in the middle of the week right now, which makes it a very, very significant day to get ready for the later parts of the week. And of course, we are going to be looking at the latest market developments and of course, fundamental factors that will likely be affecting the market sentiment today. Well, so far this week, we have been monitoring three financial assets since the beginning of the week. These are the USOILSPOT, the GBPUSD, and of course my favorite, which is the XAUUSD, popularly known as the gold spot. And so far this week, we've done pretty well across these assets, as we saw since the beginning of the week how the US dollar was unfavorable, as majority in the market were not seeing the dollar as attractive, which led to situations where other assets increased in momentum against the US dollar. And of course, we did took advantage of this opportunity, capitalizing on the pound sterling, the gold, and of course the US oil as well. However, in the last 6, 7, 12 hours, let me say, we begin to notice some traction in favor of the US dollar, and this is likely as a result of the slight recovery in the US Treasury bond yield, which of course definitely is correlated to the US dollar. So we are going to be looking at how the assets on our watch list have been doing today and how we intend to capitalize on the next potential move that will happen today. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update as to how we are going to be managing this position. So we are going to be expatiating further on that one. For those of you who are joining for the first time, you are highly welcome on board, and I'm so excited and glad to have you around with us. And I do know that you may be concerned on what this session is all about. Well, the Forex Morning Mastery is a platform where we come to do a follow-up detail to the videos I shared during the course of the weekend. Remember, I do share videos during the course of the weekend where I prepare for the upcoming week, and it's very necessary and important that you watch this video as a background knowledge ahead of the session, as it will give you an insight into what we will be talking about today. And as technical traders, we gather here on a daily basis as a community and engage on follow-ups and reviews of our current positions in preparation for both the London and New York session. The session kickstarts officially 9:05 a.m. West African time, 8:05 a.m. UTC, and I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. My aim here is to equip you with knowledge and skills necessary to make informed trading decisions independently. The more time you spend with me, the better you will become at comprehending our analytical approach and utilizing the information you gather here to enhance your own trading decisions and strategies. So once again, I welcome you guys on board, and I encourage you to engage in the comment section, as the more inquiries you have, the better you will become along the line. So with that being said here, and With all being said, of course, we will be diving right into the business, and we shall be taking the first routine we usually do by checking on the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. And based on the assets we've been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom economic dockets. Now, if we look at the economic calendar for today, Wednesday, November 22nd, you will see here that we do not have any high impactful event. So for the sake of trying to see if we could have some fundamental factors that will be affecting the market sentiment today, I would love that we include the medium impactful event, and let's see if we have something to work with. And if we don't, then we will rely on our technical skills to position ourselves for the next move. So right here on Wednesday, okay, we do have some. In fact, we have a handful here from both the United States and the United Kingdom. So we are going to be looking at the ones that are likely going to be giving us some volatility or bringing some liquidity in the market, and which of course will be serving as a catalyst to push price. Now, the first one I will see here is from the United States, and that is coming in about 6 hours, 5 to 6 hours from now, and that is the durable goods order. Now, for those of us who don't know what the durable goods order is, well, this is a data that is released by the US Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods planned to last for 3 years or more, such as motor vehicles and appliances. Now, the final figure shows the state of US production activity, which of course is a sensitive to the health situation of the United States economy. Now, generally speaking, a high reading is considered as positive for the US economy, which would reflect as positive traction for the US dollar. Now, if we look at the previous data for the month of September, both for the excluding defense and excluding transportation, we can see we have 4.6, 5.7 and 0.4% respectively on that one. Now, if we compare the previous data with the economist expectations, that is what consensus are saying here, you will see that the figure for the consensus here is quite lower than the previous month, which for us is a sign that there is a little bit of contraction in that sector, which is not something promising for the US dollar. So we are going to be looking forward to what the actual data is going to be on this one. Then moving on, that same time as well, we are looking forward to the initial jobless claims, which of course gives us an insight into the health of the labor sector. And this data here is released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurances. Now, a larger than expected number indicates weakness in the US labor market, which of course will dovetail to negative or let's say negative traction for the US dollar. So if we have a data higher than the previous month, then we know that the US labor sector is not doing pretty well at this point in time. Now let's look at the previous data here. The previous data for the month of October came in at 231,000, and we have consensus projecting 225,000, which is a little bit lower than the previous data for the month of October, which is something positive in that regard. So we look forward to see what the actual data will be on that one too. Then another very impactful event I will say here is coming in about 8 to 9 hours from now, and that is the publication from the University of Michigan, which is the Consumer Sentiment Index. Now, this is a survey gauging sentiment among consumers in the United States, and the data shows a picture of whether or not consumers are willing to spend money, a key factor as consumer spending is a major driver of any economy you can think of. Now, with the situation here, a high reading should be considered as positive. That means consumers are very confident about the economy, so they spend, and there's going to be some expansion in that regard. Now, let's look at what the previous data is saying here. The previous data says 60.4 for the month of October, and we have economists projecting 60.5. So with that, there is a little bit of positive expectations in that regard. So we also want to look forward to what this actual data will be. So this event we are looking forward to from the United States Economic Docker is going to be happening within the next 7 to 10 hours from now. So, and of course, as technical traders, we do know that the anticipation of this event is going to reflect on the chart as price action, which of course gives us an insight into the sentiment of market participants within that market environment. So now, with the information we have gathered on the economic calendar, we do want to be moving right into the chart, and let's look at things from a technical standpoint to position ourselves ahead of the next potential move for today's trading session. I see comments here in the comment section, so before I move on, let me just check in. I see your comment, Eric M. Good morning to you. Glad to have you around. Jonah Aruna, Raja BD, N. Krishna Veni. Good morning to you guys. Hiker's Diary. Good morning to you as well. Ronald Kalmin and Thomas Baladon. Good morning to you guys. I really appreciate your checking in here this morning. So with that being said here, let's dive right into the business. And as usual, the first asset we will be taking on this morning is going to be the US Oil Spot, which usually takes quite a couple of more seconds before it loads up. So I will wait a little bit to see how long it's going to take this time, and let's see how this plays out before we move on. All right. So I think it's taking a little bit longer than expected. So I'll probably have to open, and okay, finally it opens up. So the next asset on our watch list for today is going to be the US Oil Spot. And on the US Oil Spot, we have been buying since the beginning of the week based on the current market structure we identified here, and the potential of the bullish momentum still looks very, very valid at this point. And before I even go further, I would like to state here that for those of you who are joining for the first time, we already done a top-down analysis on this asset at the beginning of this week. So basically on the Forex Morning Mastery, we only come here to do a follow-up detail on this asset. And if you are willing to know how we got to this point, how we were able to identify the levels you will be seeing right here on the 1 hour time frame, then I encourage you to watch my videos. I have the links right in the description box of this current video you are watching, so you can have a background knowledge of how we actually got to this point. So with that being said, this morning I shared an update as regards to the current situation in the market, and of course the fundamental factors that are driving the psychology behind the price action we are seeing on the chart. Now, yesterday we had the release from the API weekly crude oil stock, which in fact surged at a phenomenal 9.047 million barrels in the last week as against the previous one at 1.335. So we had a whopping variance of over 8 million barrels stockpile for the US crude oil stocks, which is something very tremendous. And I think this has caused offset the gains caused by the projected supply restriction from the OPEC Plus and its allied producers. And at this point, we should be, based on this scenario we are looking at, we should be expecting that price to drop to the downside, because we all know our simple economics. We know that when there is increase in supply, definitely price should drop, right? But at this point in time, the bullish momentum is still looking very visible around this area, and I could attribute this bullish expectation to the OPEC Plus meeting, which is coming up later this week, November. What date is that one? I think it is November 26th. That's on Sunday. That's about 4 days to come, and there is this general expectations in the market that there's going to be some further oil cuts by Sunday. And as a result of this, majority are not sure if they should keep their positions on the US oil so that they can benefit from the artificial demand that will happen in this market. So at this point in time, we are at a limbo, as you will see on the charts, between Monday, after we enjoyed that bullish momentum, till the present moment. Price action has been confined within a specific range of the $77.95 level and the $76.80 area, to further emphasize the level of uncertainty and indecision going on in this market right now. So it simply tells us that majority are not sure of where price is likely going to go. Now, before we go into the details of how we are going to be positioning ourselves for today's trading session, I would like to take us back to the beginning of the week and let us have an insight into what led to the idea of us buying the US oil at the beginning of the week. Now, so at the beginning of the week, remember we had a situation here where price action was confined within the $76.80 level and our key level for the week, which is located at the $76 area. And if you remember vividly, we talked about how important this confluence is as we saw this range happen along the resistant line of the descending channel we identified on the 4 hours time frame. If you had not watched my video on the USOILSPOT on Monday, check the link in the description box below, as I did a top-down and well-defined analysis on this particular asset. And one of the things we said on Monday is that if price will break out of that resistant line of the descending channel, we will be looking out for buying opportunity. But if price breaks down and comes back within the descending channel, we are likely going to be looking out for selling opportunities. Now, look at what happened on Monday. We saw how price did break out of the resistant line of that descending channel, breaking out of the resistant line of that range as well, had a $76.80 level to give us that first buy position we took advantage of yesterday. And in fact, price moved significantly well. We had price move over 160 pips before this bearish momentum came in on Tuesday. Now, since then, price has been consolidating, and remember that we did move our stop losses accordingly, so we were taken out of that buy position with about 100 pips thereabout on that one. Now, since yesterday, now price has been consolidating, though if you remember vividly, if you are with us during our live session yesterday, we talked about taking advantage of another buy position if price will break out of the $77.50 level. And of course, if you are taking advantage of that move, price is you will currently be having about 27 pips running in profit at this point in time. Now, for me at this juncture, I will be advising us to move all our stop losses. I did mention it on my Trading View and Telegram platform this morning that we should move all stop losses and secure the current buy position, as we are in a limbo right now where we do not know where the direction of price action will be. Though it's still looking like a retracement move where we have been seeing some buy pressure around this area, and the inability of sellers to break through the $77 area is still giving us the confidence that buyers may still likely push price further to the upside. But with the latest development from the EIA crude oil stockpile that came in with a phenomenal reserve, I'm thinking that price may likely drop. But the OPEC meeting that we are looking forward to is giving some indecisive face at this point in time. So let's move our stop losses, secure the current position at our entry point around the $77.50 area, and let's see how the price will play out for today. And at this point, you will see that we are within a range where price action in the last 12 hours has been confined within the $77.95 level and the $77.50 area to give us an indecisive phase right now. And of course, you know how we use our flat channels whenever we identify them on the market structure. We do want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. Now, with this situation here, that's what we're going to be doing. We are going to wait patiently for the breakout or breakdown to happen. Now, for those of us who are joining, okay, let me just say this. There is a way through which we usually capitalize on breakout of structures. Now, for those of us who are profitable this week, we can afford to place a buy stop order above the $77.95 level to capitalize on the breakout structure. And if price continues to climb to the upside, breaking out of the $78.40 area, we had more buy positions to our existing trade. However, if you are joining us for the first time and this is your first position on the US Oil Spot, I would encourage you to exercise patience and wait for confirmations like retest of structure on the lower time frame to give us the opportunity to join that uptrend moves. So the same thing also is applicable to the breakdown of the $77.50 area. But personally, if you would ask me, based on the continued buy pressure that is observed around the $77 area, I would rather want to see price action break through the $77 area to the downside before I want to consider selling. But if we can see signs that sellers are building on momentum after the breakdown of the $77.50 level, like series of lower lows and lower highs before the breakdown happens, then we can actually join that bearish move to the downside. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you update if there is any significant setup in that particular regard. So these are my views on the US Oil Spot today. I still maintain a bullish bias here. I'm still looking out for more buying opportunities. But if price breaks down the $77 area, then we will have no other choice than to start considering selling the US Oil Spot. So let's see how the market will play out here in the next couple of hours, and I will be with you in the comment section to give you updates on what to do next. So that's my view here. You want to be marking out these levels, and if you have any questions whatsoever as regards to my illustrations, or you still need some further clarification as to this current market setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. right, so I see your comment here, Adam Ishak, Innocent Babe. How are you doing this morning? I'm doing very well right here, and I hope you're doing as good as well. You're waiting for the gold analysis. All right, no problem. We will be there in a moment. Hiker's Diary says here the price testing the neckline or that double bottom master. Yes, it does. You see, one thing about the financial market is that we want to be as flexible and as dynamic as possible. It is not all the time the market respects these theoretical expectations. As you will see, even though we had the breakout retest of that neckline of what looks like a double bottom structure there, it's clear that since in the last 12 hours, price action has been confined within a range, which is more or less a red flag that there is a level of uncertainty in this market. So we want to keep our options as open as possible. We could have price break out the $77.95 level and of course continue the uptrend, but there are chances that price could drop to the downside. So we have to take also the fundamental factors that are driving the market sentiment as well. Like I said earlier, we saw the US stockpile rose by a phenomenal 9.0375 million barrels last week, which is something very, very phenomenal, even compared to what happened in the previous week, which was 3 point something. So when there is a high supply in the market, there are chances that price could drop to the downside. So we want to keep our options as open as possible. So that is why we are marking out these levels, and whatever direction the breakout happens will give us an insight into where we will be going. So let's keep our minds open, and of course I will be with you in the comment sections to give us updates on what to do. All right, so Thomas Baladon says XAUUSD is all over the place. Of course, we will be looking at that in a moment. Torres Master says, how am I doing? Well, thank you. I'm very fine. Thank you. And I trust you are doing very well as well. So in the absence of no further questions, I do want to assume that we are all on the same page here. So in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, which of course is the cable market. And in fact, we have quite an interesting situation going on in the market right now. As we can see, price action has finally taken out all our buy positions that we've been holding on since the beginning of this week. And for those of us who took advantage of that bullish opportunity, well done, and kudos to you for being on standby to capitalize on that one. Now, during the Asian session today, we begin to notice some selling pressure come in, especially around the 1.25500 level, giving us sign that we could be seeing some bearish momentum to the downside, which we are not sure at this moment if it's going to turn out to be a retracement phase or probably going to be an outright sell-off at this point in time. But if you would ask me personally, I still believe that this move could be a retracement and that pound sterling may still find some support from the hawkish comment made by the Bank of England's governor, Andrew Bailey's. He had a couple of speeches on Monday and of course yesterday too as well. And on Monday I told you how he said something, what he said about the inflationary status of the United Kingdom economic docket and how the potential of a rate hike is very, very likely before the end of the year, which of course gave some support to push the pound sterling up into that high around the 1.25500 level. Now, he also had a speech yesterday, remember, over the night, and I think it said something. I think I gave a summary somewhere. Let me look at it. He said something about the Israeli-Hamas situation going on right now and how it's going to be affecting. So he said here that it was too early to think about rate cuts. That's a very, very good signal that we are likely going to be having a rate hike, and borrowing costs might have to rise again if inflation proves to be more persistent than estimated. Now, Bailey went further to state that the conflict in the Gaza Strip has increased the likelihood that inflation will rise again. And you know that the precautionary measures the United Kingdom is using to stall the sticky inflation is to raise interest rate. So the possibility of another interest rate hike is still in this particular market. So I still think that price may continue the rise. But now that we have a bearish momentum, the question is how far will those bearish momentum go before another wave of bullish momentum will happen. So now let's look at the current market condition from a technical standpoint, and for the sake of those who are not part of our earlier sessions could have an idea onto what led to the decision for us buying this asset this week. And I still encourage those who are new with us here to watch my videos on the GBPUSD, as I have in there a top-down analysis that will give you a background knowledge of how we got to this point that you are seeing on the 1 hour time frame here. So at the beginning of the week, we had the situation where for the first 4 to 5 hours, price action was initially confined within the 1.24650 and the 1.24465 level to give us an insight into the indecision that happened at the beginning of the week. And of course, you know how we do it. Whenever we have this kind of range, we want to exercise patience and wait for the breakout or breakdown of that range to happen before we jump into any position. Now, prior to our live session on Monday, I told us all that a breakout of the range had already happened, which of course I missed. And for those of us who missed out on that opportunity, we could look out for price coming back to retest the structure in anticipation of another wave of bullish momentum. And that was exactly what happened as we saw price continue to the upside. And in that regard, we had multiple entries. Remember, we marked out the 1.24950 level. We also marked out the 1.25100 area where we said we want to see price break out of the structure so that we can add more position. Then during our live session yesterday, we also had this level, had the 1.25400 area, and after price broke out of the 1.254, we saw it move about 18 pips before this bearish momentum began. And of course, for those of you who are with me on both my TradingView and Telegram platform, I did told us all to move our stop losses accordingly and secure all our position. And if you had done that, you must have been taken out of that position right there. Now we have seen an interesting situation, and in fact a setup unfold on the chart right now as price action has finally broken down that ascending trend line which was supposed to be guiding our bullish momentum since the beginning of the week to incite some selling opportunities here. Now, for those of you who had capitalized on that breakdown of the 1.254 and that ascending trend line, well done to you for capitalize on that move. Personally, I missed out on that one as it was still very early in this part of the world, still fast asleep. And we saw if you are taking that move, you will be having about 30 pips in profit. So I will encourage you to move your stop losses right now. Secure that position as we continue to monitor how price action will react to the 1.251 where it has been oscillating in the last 1 hour. Now, with a well-secured position at this juncture, how do we intend to capitalize on the next move? Will this bearish momentum continue to the downside? And if it does, how far will it go? And if we know how far will it go, when will the next bullish momentum happen? Now, first of all, I want to call our attention to this ascending trend line that we spotted here, which captured the series of higher lows since last week Friday. And remember that this ascending trend line has been supporting that bullish momentum we have been enjoying in the last 48 hours or so. Now, since price has broken down that structure, we have another low here around the 1.23750. So what I want to do here is to project this ascending trend line to capture that low. And look at what we have here. Price also have broken that trend line as well. So right now we are at a crucial juncture around the 1.25100 area, which shares a beautiful confluence with that major ascending trend line. Now, how will price action react to this level? How will market participant react to this psychological level around the 1.251? Are we going to be seeing a breakdown of that structure, or are we going to be seeing some reversal pattern here to incite an uptrend continuation? Now, if you look at this candle that is currently running right now, it still has about 8 minutes 24 seconds for it to close. So personally, I will be advising that we let this candle close to see how it will end and what kind of pattern it will give us. Now, if we can see reversal patterns around this area, maybe like double bottom structures, head and shoulder pattern, we mark out a neckline, and that neckline needs to be broken to validate it. And if price climbs back above the ascending trend line, I'm of the opinion that we want to continue buying the GBPUSD. However, if price action does break down the 1.251 area, price would have also broken out down of that ascending trend line. Personally, I want to see some retest of structure to happen to give me signs that sellers are truly getting ready to push price further to the downside before I want to consider joining this. And this would reflect maybe as a retest of the ascending trend line or the 1.251 area. Then we want to be joining a bearish move to the downside. And if price continues to drop, we have the 1.24950 to add more sell position to our existing trade, and we also have the 1.24650 to add more sell position. And remember that the 1.24650 is the resistant line of the range we identified at the beginning of the week. So depending on how price reacts to this level will determine if we are going to be adding more positions to our existing trade. Now, also remember that we have our key level at the 1.24 area. Now, for the sake of clarity, let us see what the 4 hours time frame is looking like, and let's relate to the key level with that understanding. Now, look at the 4 hours time frame. Remember, we had this ascending trend line marked out. Now we are at a very crucial juncture here around the 1.25050. Now, it's very, very important that we see how price reacts to this area. So if it breaks down, retest the structure, we might be seeing a situation where price may drop into the 1.24 area, maybe to incite an uptrend continuation. Let's see how the market will play out. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So let's see how this will play out here. Mark out your 1.251, mark out those ascending trend lines, and let's see how the market will react to this current structure. And for those of you who sold at the 1.254, I already mentioned that we move our stop losses and secure that position right there. So these are my views on the GBPUSD. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions, after which we move on to the next asset on our watch list. So I can see a comment here from Torres Master. Good morning. Okay, I already greeted you earlier. So you're asking, how can I enter the trade when you give us the insights? Well, we've talked about this countless of times, and I in fact said it just a moment ago. So I hope you were around when I said it, but I will do a quick recap on what this is all about. Now, we already identified levels on our chart, which serves as entry areas which we want to be using to capitalize on next moves. Now, there are two ways to which we can capitalize on the move depending on where you are with us. Now, for those of us who have been profitable so far this week, we can afford to place sell stop or buy stop order at these levels to capitalize on that move. And of course, we know that even if it doesn't work out, we know that we are only leveraging on some of the profit we have made so far this week, so it's not really tampering with our real funds. However, if you are new with us and this is your first time taking a position on a particular asset we are looking at, then you want to exercise patience and wait for a breakdown or breakout or retest of structure to happen before you want to be jumping into that position. Now, in this case scenario we are talking about here, where price action is currently oscillating around the 1.251 area, which interestingly also shares a confluence with the ascending trend line. So in this case scenario, if you are new, then you want to be waiting for the breakdown to happen, price to close below, then wait for a retest of structure to happen before you want to be jumping into the sell position here. Now, if you are with us already, you can simply just place a sell stop order. You know you can afford to capitalize, leverage on the profits you had made so far. And if it doesn't work out, you know that you're only losing some of the profits you had made and not touching your real funds in your portfolio at all. Especially those who had sold at the 1.254 area can afford to place a sell stop order below the structure and see if it's going to work out. So that is the way we simply get ready for any potential move. Now, I got a lot of DM, where people are talking about the entry point. Now, one thing I would like to state here is that you cannot have the impression or the intention that you want to be spot on your entries. One thing you must learn to do is learn how to lose. The moment you learn how to lose, then you can start making money. But if you are thinking of you don't want to lose money, then you will definitely lose money, of course. So you need to learn how to lose so that you can make money. So in this case scenario, there are times you will have to place your sell stop or buy stop order to capitalize on that move right away, especially if you're already in profit in your previous positions, and see if it's going to work out or not. So what I just see here from the question you are asking is that there's still some iota of fear going on in your mind, and if you still have fear, definitely you cannot make money in the market. Now, why are you having fear? The reason why you are having fear is simply because you want to risk a significant amount of your portfolio, which you're not supposed to do. Basically, it's advised that to risk as minimal as possible. Risk something that your emotions can handle. 1%, 2%, 3% are still quite okay. From your portfolio you want to be. If you are risking 1% of your portfolio, you know, okay, fine, if price goes against me, I've only lost 1% of my account, then you can leave to trade another day. But if you are risking 50% of your account, then definitely there will be fear coming in. So you need to question that thought process that is making you be fearful. Why are you fearful? Are you risking too much on a particular trade? If you do, then you need to reassess your risk management strategy, and with that you will move to the next level in trading. So I do hope I answered your question, Torres Master. And in the absence of no further questions here, we shall be moving on to the last asset on our watch list. So the final asset on our watch list for today is my favorite, and that is the XAUUSD. And in fact, yesterday we did enjoy a phenomenal move. I think we scooped in over 300 pips from about 1 to 3 positions during the XAUUSD live window. For those of us who are live on the XAUUSD live window yesterday, well done to you guys. I know you would have taken advantage of these opportunities as we rode the breakout of the $1,989.50 level to capitalize on this move. Now, with the current situation here, considering after price action tested that new high at the $2,007.50 level during the later part of the New York session yesterday, you will see that the price of gold is struggling to build up on yesterday's gain. As you will see, there has been some fluctuation, especially during the Asian session, where price has been ranging around the $2,007.50 level and the 1,997 area, to emphasize the level of indecision here. Now, at this point in time, price is at a crucial level, a psychological level at the $2,000 mark, following the hawkish FOMC meeting minute on Tuesday. Now, the FOMC meeting minutes from yesterday was a little bit hawkish, as we got to have a detailed understanding into what really went on in the meeting 3 weeks ago. And from what we were able to come up with, it shows that the Fed officials are still considering further interest rate hike if the inflation still remains very sticky. And with the way things are going, the inflation still remains the same, which opens the door for the potential that there will be one more interest rate hike before the end of the year. Now, at this point, there's been a divided situation among market participants, where some people are actually thinking that there is not likely that the Fed will increase interest rate, and there are some that are very optimistic that there will be some further interest rate hike. So this whole scenario here, this imbalance here, can be seen reflecting on the chart right now, as you will see that in the last 12-15 hours, price action has been ranging. Now, there is a new development that has happened, later yesterday. We saw that this FOMC meeting minutes also triggered a rally in the US Treasury bond yields. In the last 6 to 10 hours, we saw a little bit of rally, which prompted some short covering in the US dollar as well. Though this momentum appears to have faded a little bit, but at this point, we do not know if it's truly going to fade or not. Now, the only way we can decipher this is by understanding the psychology behind the market sentiment, and the only way we can do that is to look at the current market structure, where the price action will give us insight into it. Now, let's run through how the week started for us here, for the sake of those who are not part of our live session, earlier live session, so that we can all be on the same page and at the same time have a background knowledge of where we are coming from. Now, if we go back to the beginning of the week, this was what we saw. We saw our price was oscillating right around our key level, which was duly situated at the 1,980 level. If you are not to watch my video, my weekend video on the XAUUSD, I encourage you to watch that video so you can have a deep understanding into how we were able to identify this level. The links are right in the description box of this current video you are watching. So we saw how price was oscillating right around our key level at the 1,980, confined within the 1,985 and the $1,973.50 level, to give us a clear view into the uncertainty in the market at that point in time. And of course, you know how we do it in this community. Whenever we have a range, we exercise patience and wait for either the breakout or the breakdown of that range to happen to give us an opportunity to trade. Now, at the beginning of the week, we saw our price broke down our ascending trend line. Remember, we did have an ascending trend line here, and you know how we use our ascending trend line. If price breaches the trend line, we want to be looking out for selling opportunities, and in that regard, we position ourselves right below the support line of that range at the $1,973.50 level, capitalized on that move, and we saw price drop about 70 to 80 pips in our favor before the bullish momentum came in. And as usual, we do move our stop losses accordingly as soon as price moved very well in our favor, and the worst case scenario, you must have been taken out at break even on that one. Then moving on, we saw how price broke out of that descending trend line we identified on Monday, which was supposed to be guiding some bearish momentum. Price broke out of that trend line, hereby negating the bearish idea. Then we remember we had ourselves positioned above the 1,980 to capitalize on that uptrend move, which we have been doing since the later part of Monday's trading session stroke yesterday's trading session, as we rode that momentum all the way to the upside, and also capitalizing on the breakout of the $1,989.50 level yesterday, bringing price to a new high at the $2,007.50 level. So at this point in time, we had all our buy position closed, and during our my commentary this morning, I did mention that we will be looking out for more buying opportunities above the $2,000 area, which of course we saw price break out. And if you had missed out on that one, price has already come back to retest the structure. So buying at this point still looks very reasonable, but I want us to take note that we are likely going to be taking out of these buy positions. Remember, we had some selling pressure resume around the $2,007.50 level. Personally, buying above the $2,000 area is, for me, a risk worth taking. So buying above the $2,000 area, and let's hope that price will break out of this new high at the $2,007.50 level. And in fact, if a breakout of the $2,007.50 level happens, I'm going to be very, very confident adding more buy positions to my existing trade. So I still hold on to a bullish bias here, but while we hold on to a bullish bias, we should also keep it in mind that the inability of sellers to break through the $2,007.50 level, as you will see, we have a lower high here, could incite a sell-off that could break down the ascending trend line we identified at the beginning of the week. So what gives me confidence to join this breakout of $2,000 level is the fact that I'm already profitable this week, so I can still leverage on some of the profit I've made so far this week to test the waters around this area and see if it's going to work or not. Now, if this does not work and we get to a situation where we see price action takes us out of this buy position, then a breakdown of the ascending trend line will be a signal that we want to be joining a bearish momentum. Now let me zoom this out so we can see this ascending trend line clearly. Now look at, since last week Wednesday, this ascending trend line has been supporting the bullish momentum. It was only on Monday we saw the breakdown happen here, which later turned out to be a false breakdown. And since price has climbed back above, price has remained above that structure. Now, if price still remains above the ascending trend line, we want to feel comfortable in our buy position. And the only condition for me today that will make me want to be selling the XAUUSD is for this trend line to be broken to the downside. And one interesting thing about this trend line is how it also shares a beautiful confluence with the $1,993.50 level, a level which supported the bullish momentum for us yesterday. Now, if price breaks down both of the structures, then we want to start considering selling. And personally, it will be reasonable that we wait for some confirmations to happen, like a retest of structure, before we jump into a position, especially if you will be joining this move for the first time this week. But if you're profitable and you can afford to risk some of the profit you have made, placing a sell stop order below the $1,993.50 level makes quite a lot of sense. So let's see how the market will play out in the next couple of hours. I think in the next 3 hours we should be having a sense of direction for this particular market. So these are my views on the XAUUSD today, as our center of focus is basically between the $2,000 area and of course the $1,993.50 level, where depending on how price reacts to the structure will determine if we are going to be buying or selling the XAUUSD today. So those are my views here. If you have any questions whatsoever, feel free to let me know in the comment section. And as well, Thank you for the support so far. I can see your likes. Thank you very much. I really do appreciate. But if you are yet to like and you found this content helpful and useful in making your independent trading decisions for today, I really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so. Then I also dropped the link to the XAUUSD live window right in the comment section. It's pinned at the top of the comment section, so you want to click on that link, click on the notify me button so you can get notified as soon as we come online. For those who don't know what the XAUUSD live window is all about, the XAUUSD live window is a platform that was born out of popular demand from this community here, where we all gathered during the New York session to monitor real-time price action on the XAUUSD. So it usually kickstarts 5 to 10 minutes into the New York session. So I implore you to be part of that session and engage in the comment section, and let's make an event out of it. So it usually lasts for the first 5 to 7 hours of the New York session, depending on how the market moves. So I look forward to seeing you guys right in that comment section. All right, you're welcome, Adam Ishak. I'm glad you found it useful. So in the absence of no further questions, I do want to assume that we are all on the same. Okay, so I saw a comment now just dropped in by Thomas Balladon. So do you think today will be a bullish or bearish day? At the moment, price is going around 2000. I thought I just explained that in detail, that you must have missed out on my explanation. We do not know when price will be going down or not, but we have structures that will be guiding our decisions for today. Currently, price action is around the $2,000 area, and in fact, price still remains above our ascending trend line that we identified here. And like I said here that we have a situation where price action is currently we have a range where we want to monitor to see how the market would react to this area. Now, if price still remains above our ascending trend line, we have no business thinking of selling at all. The only condition that will make us considering selling the XAUUSD today is for price action to break down the ascending trend line and the $1,993.50 level, where a retest of structure will be a beautiful and further confirmation that we want to be going bearish here. So the trend line here is a major factor that will be determining if price will be going upward or not. If you would ask me, I don't know where price will be going, but we have structures that will be guiding our decisions for today. But sentimentally, the idea of the OPEC, the FOMC, the hawkish FOMC meeting minute from yesterday may likely send price go to the downside. That's a very valid possibility that we have in this market. But besides that, we have structures already that we will be using to guide our decisions for today. So that is why I usually emphasize that we want to be marking out our chart with these levels, as they will be guiding us and serve as a reference point for our independent trading decision. So I hope I made myself clear, Thomas Balladon. All right, you're welcome, Ika's Diary. And on this note, I want to call it a day. It has been a wonderful moment with you guys today. I really enjoyed every single moment I had with you, as we were able to take on 3 major assets, including the USOILSPOT, the GBPUSD, and of course the XAUUSD, where we were able to identify simple setups using our fundamental tools such as trend lines, key levels, and chart patterns to position ourselves strategically ahead of the next move. So I hope you marked out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And please exercise patience. Let's allow our structures to mature before we jump into any position. And always remember that you need to have a consistent and well-defined risk management strategy for every position you open. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And for those of you who are joining for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, I look forward to seeing more of you same time tomorrow. And trust me, the more time you spend with us in this community, the better you get to understand how things work, how our analytical approach works here, and eventually be able to use the information you gather here to make your own independent trading decisions. I see your comment, Rex. Hello, Rex. How are you doing today? Glad to have you around with us this morning. So it's on this note, I wish us all the best of luck today. Trade smart, trade consciously, and see you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.